welcome back to the RationalInvestor.com's Daily Brief. Happy Monday morning, TGIM. See, there's a few people around. Maybe we'll get some more viewers as this squawking goes on. We'll probably try and do like a half hour kind of summary here. What I see happening in the markets, news, econs, and then pop on over for our after-party show, maybe dig apart a few special things. I think Mondays we're going to try and maybe take a good look at the US dollar index, sort of give us a sort of a footing for what to expect out of that. We have a couple other things. What are some of the other things that we reviewed that we're going to do here on Monday? Chris?
Weekly commodity trend survey is
Yeah.
usually what we like to review on Mondays.
See if there's any new weekly key reversal signals or anything along those lines. So, it should be an action-packed episode. And this little summary. Hopefully I can do a half-decent job. Remember, Monday's kind of an odd day. We're right out of the gate. You know, what happened on the weekend, all the markets sort of playing catch-up. I don't really like to take a lot of day trades, although I did sort of take a day trade last night on Bitcoin because it was such a compelling level. And there were a lot of reasons that if you still felt like Bitcoin was a bull to step in on the long side when the market dumped against those previous lows. And sure enough, that turned out to be relatively accurate. So that was nice to see some performance there. But generally speaking, in the futures also too, we had oil launch itself higher, and it did it with a big violent gap. So I do believe that that's probably going to be a main driver as to why stocks and equities are maybe a bit softer here, especially out of the tech space. So I saw technology stocks and those kind of things were basically down on the day. Also too, Econs came out, a little bit softer than expected. Actually, interesting enough, when we look at the Econs, you'll notice that we're actually, like, economic wise, like activity wise, we're actually right back to sort of the crisis low levels that we saw in 2000 there, or 2020. Interestingly enough, you don't hear anybody talking about, oh my God, you got to give them money. Even though technically the economy is basically at the same point. So it just goes to show the whole damn thing's a fraud. Oh, well, what can you do? Buy W, sell M's, right? Try and makes a little bit of money, try and stay ahead of the tax man, stay ahead of the inflation game. And go buy your island. I think that's the whole goal here. So anyway, where should we begin our conversation today? Breadth indicator still pointing up. It's a little bit of an interesting dichotomy. Like I said, you've got the Dow up a good 200 points. And it's interesting where the strength is coming from in the stock market. You can see the energy stocks are very strong. Obviously, with that OPEC plus, I think they're calling it, sort of group of energy sort of producers. I don't know whether that's the right word. All agreeing to cut production. I get the impression that that this is bullish of energy, but the interesting thing is when you actually look at the energy charts, notice that, crude oil jumped up and then it just is basically flatlined here, which is a bit interesting. And if we actually look at that crude oil chart, it was fat. I mean, there's so many things you can learn from this chart. It's quite remarkable, really. I always like to, if I'm starting my trading day, I always like to check in on the 4-hour chart and just see if we happen to be at levels. I'm a really big fan of the ATR as a way to measure volatility. And you can see in this case, with that gap higher in price, we actually jumped above ATR script. This is a script that was written by a site member, actually. It's a fantastic script. So we're already sort of like nosebleedy, overbought. Interesting too. We've learned, I guess, through this whole sickness market, this was the gift the good Lord gave me, I suppose, for me being here day in, day out, and just trying to be a positive influence in your lives and trying to, as I said in the video yesterday, my big goal is just simply to paint a clear picture of what the world looks like, who the players are, what their motivations are, and obviously, what are best practices when it comes to actually risking your money in the marketplace. So, just understand that my message to you isn't really skewed one way or the other. I mean, I'm not going to be able to make any significant difference in this world. My opinion doesn't really matter much. In fact, actually, what we always tell people on the site is opinions are worthless. They're meaningless, including Brian's. The only thing that matters is your darn setups. Trade those setups. Anyway, and they're priceless. Anyway, so good Lord gave us this gift of chaos theory, learning through this health crisis, and lo and behold, I mean, look what the market did. Look where it stopped. And fascinating, when it gets above here, notice it seems to run into a bit of selling. So clearly, it's almost like the market knew that this was going to happen. It's kind of freaky how that happens. Also, too, interesting, I see a lot of people draw trend lines on social media and get it completely wrong. But how do you actually draw a correct trend line? And really, it's all based off of this concept called market structure. And fascinating how this M right up here has actually defined the rally resistance point here back in the middle of March. And lo and behold, why are we stalling out in this area? Well, I think it has everything to do with this trend line. And we all know, at least if you don't, maybe write it down, probably shouldn't be taking a long trade just on a stab through this line. That's really dangerous. And if this is actually really a bull, we need to see a big fat W come in over here so we can draw more fog and bomb levels. And of course, the W's are going to paint higher objectives. That hasn't happened yet. And frankly speaking, I think the market right now is still kind of just digesting what the hell just happened here. And are these cartels really of any significance anymore? Because frankly speaking, other than a country like China, like here in North America, we're actually, ironically enough, I mean, we've got silly substitute drama teachers who want to put the oil business out of business in Canada, which is just stupid. But we've got like the second largest oil deposit in the world here in Canada, just sitting there. If we want the oil, it's just sitting there, just waiting. It's so ironic. Screwy world we live in. And then, of course, the United States of America, being like the big world economic engine, that's where all the oil was going for the longest time. Now, technically, the United States of America is a net exporter. But again, you've got like Skeletor there in the White House who's trying to kill the oil industry. So, and interestingly enough, you can almost feel the pendulum starting to swing back. And, Mr. Trump, of course, was just indicted. And a lot of rhetoric that I'm hearing is that this is gonna be perfect for Mr. Trump. This is free advertising. He's gonna basically be on front page, cover of newspapers every single day. And they always say there's no such thing as negative advertising. Advertising is advertising. If you can just get your name in front of people's faces. So how ironic, all of these indictments and stuff like that. I mean, I don't know whether they're going to stick or not. That's a whole other conversation altogether. Now, keep in mind, I always found this fascinating. When Donald Trump was president, he had at any given point in time over 1,000 active lawsuits against him. 1,000! I mean, you can't write better fiction than reality like that. So I'm sure he's like, oh, geez, here's just another one. Yeah. So anyway. So, point of the matter here is, did the market already know that this was going to happen? In a weird sort of way, I kind of think it did. And interesting too how as I was saying there a few minutes ago, the Bitcoin price, and actually this is the chart that I like to trade off of, and I can understand for a new person coming to trading, just looking at this image, I want to post this image in the lounge and go, oh yeah, see, there's a day trade there. Doesn't that look obvious, right? And I go, what the hell is all that spaghetti? But this was probably I drew this chart together to try and just illustrate for the site peeps that when that crude oil market just launched itself higher, I mean, like it gapped higher and then that was it. There really was no follow through. And we're still just sitting right up here, right? We gapped higher, opened there, went all the way up here, then back down. And here we are just sitting right at 80 bucks. And actually, somebody was telling me in the day trader room this morning that crude oil just jumped up to 81, which happened to be a Gann square of 9 levels. I think all the level 2ers right now are doing Gann and square of 9. And FYI, to the level 2ers, anybody who didn't get the message, I thought it was interesting. You know, we have so many people come and go at the TRI site, and this probably should be for the after party, but I'm just going to see if I can quickly sneak it in here. You know, one gentleman that worked with us years and years and years ago, Benjamin, it looks like TradingViews just sort of loaded him. I'm not quite sure what the term is. But Josh, bless his heart, had all the scripts, and he republished this Gann square of 9, the dynamic square of 9 script. So you do have it, and I updated the script in the library. Anyway, so I had a level 2er. I think he's currently in the level 2 program. Anyway, he pointed out that $81 was a square of 9 level on his crude oil chart. So there were a lot of reasons to think that crude oil would head up to the top of the range here. And then what do we do now? And interesting, if you can kind of see. You know, I often tell you guys, you know, we should probably pay attention if you ever see a market move about 2% or more. So not a big surprise. We're up 6%. That should get a lot of people's attention. You can see everybody else is kind of like, oh, what the hell? What do we do? What do we do? Stock market, as I said, kind of a mixed message. You know, I think I've told you guys before. I mean, it's kind of a hard concept for new people to trading to wrap your head around. But usually what ends up happening is purchasing managers, your business basically probably about 70-80% of consumption in our society. And then, of course, business is predicated on, you know, final sales to the consumer. So if a business manager is sitting there and they've got, say, $1 million in their operating budget to, you know, just keep the place going, they have to have gas for the cars. They have to have electricity to keep the lights on. They have to have natural gas to keep the heating or air conditioning going, whatever. And if energy prices are really high, well, that's going to take a big chunk of that budget. If energy prices are really low, then they can redirect that budget into producing more efficient output from workers, which of course drives profitability. So, had a big jump in oil, so you can see the oil stock's very happy today. Tech, and you know, consumer discretionary. Interesting, Tesla would be down. You would have thought with a big jump in oil, Tesla would have been up, but you know, there's production issues around there. But you can see Amazon down, Google, Meta, Microsoft, Apple's up a little bit. But usually what ends up happening is if you have a big jump up in oil, then usually you have a softness in technology. And that's kind of what I saw. Also, too, I think this is probably going to hurt the smaller cap stocks in our society. So the Russell 2000, you can see here are all the stock indexes. The Russell 2000 is actually looking very dangerous here. Russell 2000 did go to new highs. So, you know, there's probably like the banking and the classic sort of, you know, brick and mortar kind of companies. They're probably relatively happy. But there you can see there's the NASDAQ, tech heavy, obviously very sensitive to the change in oil prices. And it's looking kind of toppy there, as we had sort of said with Bitcoin earlier, we had a really interesting dump into a technical level. You know, keep in mind, and you know, for the public, I've often talked about this, that, you know, we had 2 doji weeks in a row. It looks like they started off another week with a doji. So I don't think really a hell of a lot's going on in the Bitcoin space here on a higher time frame basis. This is just all messing around on these lower time frame charts. There's a 30-minute chart. And, what I told the community when I sort of was analyzing the market after I came back from Liam last night was, and this is our 4-hour chart. This is probably the best thing to talk about with the public is, if we start actually seeing these smiles confirm, well, that really is implying a change in trend, right? Whenever the market's smiling at you, you better watch out. It's getting ready to take your money. So it's interesting in this particular case, we came right back down against those lows, really just first thing when oil gapped higher there yesterday morning. And I put out a tweet just saying, folks, we are right on the brink here. Be careful. And if this thing does go and smile out, we've got trouble. We've got trouble. Wait, don't run. This kind of trouble is lots of fun. Pop the matic, pop the dice, pop a 6, and you move twice. How can you tell I was a latchkey kid, eh? Anyway, there was the tweet last night. And interestingly enough, we dumped into this level. And as I said, there would be a lot of people around the world looking at this. And if we had started to close down below here, they would go, that's it, the Bitcoin rally's done. So we dumped into that level. Of course, Brian, always, candle body lows for trade location, as I showed you there a second ago. There were a number of really compelling reasons because we dumped into the level and then we just stopped. So there's your candle body lows for trade location. Brian's favorite fib, 78.6. Fog and bomb levels. We had 2 fog and bomb levels. And then all of a sudden, a W starts forming here in price. So Brian, just being the idiot that he is, went and bought the market there. So turned out to be a really nice trade, I gotta say. It was fun, listening to the alerts go off. I always, as a policy, if I'm going to come in against these lows, and like I said, this was a hell of a low here. It was just a beautiful setup. If I'm going to come in here, I'm going to sell half of the position at some sort of predetermined fit. In this case, it was the 50% rule, right? I think I've told you guys countless times. And when this alert went off, it actually woke me up because it happened at you see about midnight my time. So boom, out goes half. And then I just put my stop to scratch. And I even said in the lounge, let's see if we can just leave the rest of this position open. It's not much of a trade. In fact, I do most of these trades just pure demonstration, just to try and demonstrate on the site the practices I'm trying to teach you guys. And so stop sitting and scratch on the remaining. I don't know what the hell is going to happen here. Maybe the market goes up, makes new highs. If it does, then we're laughing. Keep in mind on the sort of the daily basis, I'm still thinking that we... Actually, I think it's probably more 4-hour. Still have these bullish bot setups floating out there. And as long as we keep making higher highs and higher lows, keep in mind, I was watching this low like a hawk, and we never went through there. So it looks like, and if the market's accepting higher oil prices here, and we actually start Wing out, and it looks like the market does want to go higher, then you're probably going to see the corn sort of melt down here and and I'll just walk away and scratch on the remaining position. No big deal. Keep in mind also, too, this was the top of a megaphone. Boom, boom. And I even pointed out in yesterday's video, this market is very, very dangerous here. Willie stupidly overbought. Somebody even pointed out massive RSI bear divs. And where the hell are the buyers? Buyers have just disappeared. So, the tweets and messages I was putting out last night was, is this going to be the catalyst that breaks, right? And where did I have that news article? Basically said, where are you here? Yeah. Is this the catalyst that breaks the tech crypto bull of late? We got a double top there in NASDAQ. Yeah. The old corn might roll over here. Because as I said there just a moment ago, there's a lot of inverse correlation between oil prices and tech stocks. Also, too, on top of the fact that there was that OPEC news, and I guess they're still trying to figure out if they're relevant in this world. We also had economic data that came out today that really is kind of flashing warning signs. I was a little surprised, to be perfectly honest with you. as I started off the video here with you guys today, the headline here is all about oil, but really, I think the headline should be about the ISM. So, in essence, the broader U.S. economic engine is actually falling back into contraction here. And I think this is why, stock markets, you got NASDAQ down a big chunk. We talked lots about the driver of that. S&P is basically flatlining here because it can't quite figure out what the hell to make out of all this. Asia was relatively positive overnight. Europe, kind of a little bit positive, but you can see Germany down a little bit. Spain's down there, but you can see Asia had a relatively okay day. Not huge percentage moves, but very typical sort of Monday kind of idea. But also too, I think that to a certain degree, the whole world sort of taken aback by, okay, what do we make out of this oil move? But the econs, the actual what's going on in the economy, I was actually pretty surprised. You can see there is the should we debate mortgage area future? Shut the fuck up and give the bankers all the money that they want. I'm going to sacrifice my life to save capitalism. Well, here we are. We're basically approaching those same levels again. You don't hear any of the banksters like demanding that we go and mortgage our futures, although, we do have this big showdown with the U.S. Congress and the U.S. Federal Reserve over debt ceiling debates. And I'll tell you, the U.S. Federal Reserve and the banksters, they've lost a lot of face in Washington over the past month or so over this banking debacle on the West Coast. I definitely believe that the banking cartel is a cartel of the money center large banking institutions, and I believe that they've had an agenda to put all of the regional banks in the United States that they can't control out of business. And I think that basically a lot of these banks fell into the trap. And now they're saying, the politicians are saying, well, it sure looks to me like the Fed just lapsed on their regulatory oversight. They should have been all over SVB saying, why aren't you hedging your duration risk? And actually, I will say, I did watch a very interesting interview. I don't know whether I have time to pull it up here for you here this morning. I don't think I even retweeted it, But I can't remember the person's name. And I have to say person because, frankly speaking, I'm not quite sure what this person is. So I have to be very, very delicate when I talk about this. So just bear with me here a second. But there is this one podcast gentleman, and I really, really enjoy his podcast. He has some just fantastic people that he interviews. I didn't retweet it, but I actually went on the actual stream and commented about it. I was really impressed with this interview with this person, Lynn Alden. And I actually went so far as to actually write comments. So I was actually writing comments, and anybody who's a TRIer, I should probably, in fact, actually, I thought there was a third comment that I had in here, but maybe I didn't save that. But there was some really interesting comments here, and then one specifically about the yield curve and the. Actually, the comment that I was actually most impressed with was about the 53-minute mark of this interview. Comment about how the housing inflation data actually artificially skews the CPI reported data, lagging it by like a few months. And it's not an actually accurate interpretation. So interestingly enough, in this particular case, you saw like ISM. This looks like a train wreck. I mean, this is basically the economy's heading over a cliff here, by the way, if you didn't know. And the irony of it all is that this is incredibly deflationary. But because the Fed is trapped with this sort of antiquated CPI data set, that, uses data from the housing market that's actually like months old, the CPI is still going to show artificially high inflation, even though we're not actually experiencing the inflation. We're actually experiencing deflation now. So it's just yet another anecdote why the Fed is always wrong. I mean, it's so funny, this stupid world we live in. So the Fed's cranking interest rates up. They're all worried about CPI and jobs data and all that stuff, which is horribly lagging. It's not real time. There's lots of anecdotal. I showed you an interview by that same guy. Forward Guidance is the gentleman's podcast. This gentleman right here. What's his name? Jack Farley. Really? I mean, this guy's top notch. He should be like on 60 Minutes kind of thing. Excellent interviews. And I'll even take the time. I'll just even post this in the lounge. Do yourself a favor and watch this. So that was a really good interview. And you can even see I even went out of my way and I actually commented here. I doubt anybody will even acknowledge my comments. But anyway, I guess the point that I would just make is that the economy is much weaker than what the Fedsters are actually purporting in the media. And this ISM number, I mean, if we get a reading below 50, that means economic contraction. Doesn't mean the economy is expanding anymore. The economy is actually contracting. Now, what should happen in a regular world is we should start see prices of all of these inflation components falling. But if you have cartels that are running around artificially propping up prices, well, that's just going to make the situation all the worse. So the Fed's probably going to have to continue raising rates, continue being strict on monetary policy, because we've got cartels in the oil industry that are fixing prices at these high levels. You have cartels in the investment industry, like the BlackRock people, who are basically going in and buying up like 400 houses in a single purchase and freezing the consumer out of the market. Thank you, Klaus, and your great reset. You will own nothing and be happy. And if you're not happy, there's your ticket to the concentration camp. I suppose Klaus and concentration camp, I guess that goes kind of hand in hand, eh? Ooh, there's a potential bomb I just dropped. Anyway, these are remarkable times that we're living in here, folks. Absolutely remarkable times. And I'm afraid, it's kind of like you just go day by day going, when's the next shoe going to drop? This 2020s. And if I'm not mistaken, I think also, if I'm not mistaken, Chris, you can correct me, on Friday, did we ask Cole to come in and give us an update on the Celestial situation?
It's Friday the 14th, not this coming Friday, but
not
Friday
this
the 14th,
Friday,
yep.
But next Friday. So everybody, you better be on that Daily Brief after party on the 14th, because if I'm not mistaken, I think there was another conjunct where like literally 4 or 5 planets all came together. Just happened just recently, and I completely let it slip from my mind. But again, sort of that celestial influence on us silly human beings. Crazy times we're in the market here. Crazy times. Suppose the only other thing I would add to this is, I think actually there's a lot of sort of normal seasonality going on here. If anything, we're kind of left scratching our heads because the oil market, it's supposed to be you buy your unleaded the middle of February, you sell it the middle of May, you made money 9 out of the past 10 years, right? That's how the trade goes. If we pull up the actual unleaded, interestingly enough, all those commodity brokers, they're all breathing a massive sigh of relief right now. So there's the middle of February. I think your buy signal was down in here. I do know, for instance, Zach, he was hunting unleaded gasoline. There is a proxy in the stock market for unleaded gasoline. I can't remember the symbol just off the top of my head. Anyway, he was playing a spread trade into that. So here we are. Ironically enough, this is just business as usual. This is exactly what the commodity industry needs. So in a weird sort of way, you have to ask yourself, did all the commodity brokers all go out, call up all OPEC guys and say, come on, guys, you got to do something to get these prices up here. We're dying 1,000 deaths. Where the hell's the damn seasonal rally? So the fact that they broke the market to new highs, I'm sure all the commodity brokers are like, phew, oh goodness, we're dying 1,000 deaths there. Interestingly enough, we actually, in this situation, you actually have natural gas actually gapping lower. Now, how does that make any sense? So, one might argue, in fact, tomorrow, Tuesdays, we'll get together with David, our Adam and Eve aficionado. But gee whiz, I'm kind of thinking that looks very Adam and Eve-ish on the natural gas. So keep your eyes peeled here. If we get a nice move up through that level there, then that W actually confirms and away we go. And interesting, too, if you had taken this W, which really didn't confirm, we didn't really get a close up there. But you'd still be in this trade because they haven't taken that low out, and you can see it's already starting to reverse back up here. Anyway, we'll keep an eye on how the natural gas goes. This would be sort of like if the economy is really going into recession, people, like historically, they love to fly into that natural gas market. So, keep your eyes peeled there, folks. That's probably a really important tell going forward. Other than that, typical Monday. So interesting how stocks kind of floundering here.
Hey, Brian.
Yeah.
FYI, coming up on 30 minutes.
All right. Yeah. Probably just to summarize what I just tried to bark about here today. It was fun playing this overnight pivot in the corn. Got basically a risk-free position left on the books. Took some profits. Stop at scratch on remaining. And that's probably the way that I would describe this range trading market. I think higher time frame participants, because of the seasonality, still a pretty good push. But, we're so late in this cycle. It's kind of dangerous coming in on the buy side if you're just Joe Sixpack. Little Schult coins, when they pop up, we look to take some profits. I've been just accumulating positions, not really in a big hurry. If anything, this was a sea of red this morning. So it's interesting to see some stuff is actually starting to turn back up. I was even putting out tweets last night that, even when Bitcoin was dumping against those lows, there were some of these alts that were actually rallying. So, let's call it a Monday. We're coming out of the gate. We had some soft econs. Had a little bit of a shock there with the OPEC oil news. It's interesting how that was priced in, and now everything's just sort of stopped there. At the same time, too, we had what I would consider an absolute train wreck economic report come out in that ISM. And so, interestingly enough, historically, you'd actually, if the crude oil market jumps like 5-10% in one day, the bond market, interpreting that as hyperinflationary, would have freaked out. But interestingly enough, the significance of that ISM report is actually overshadowing anything that's happening in the crude oil market, which is how ironic, right? I mean, I'm sure the Russians, they're breathing a sigh of relief. At least they can get the oil price up a little bit higher. So when they're selling their oil to China and India and stuff like that, they get a little bit better price. But the bonds themselves, they're actually rallying on that really, really bad economic report. So having said that, I think we'll probably leave the public broadcast at that. Maybe pop on over if you'd like. We can have some more talks about that really interesting podcast with, what's that person's name? Lynn Alden. Really interesting there. Also, too, Mondays, like I said, maybe we'll take a boo at the US dollar index. Sort of what does the sort of backdrop of this current market look like? And still have the stock market pointing higher, but interestingly enough, we always want to be cognizant if we start seeing the market start to spit out overbought signals on the histogram on short and medium term. I don't really see that warning sign just yet, so I think it's just sort of business as usual. Seasonality, like I said, commodity brokers are finally going, hey, actually, we got a half decent year here. So in the after party, we'll take a look at the weekly commodity trend survey, see if there's anything really that stood out. And then also, too, on Mondays, I like to look at any new weekly signals out of the My Signaling page. And do we have anything like key reversals and stuff for us to paying attention to? And you can see already new signals have been coming in, so we've got some work to do over there. All right, I think we'll leave the free podcast at that. PMA for the win. Hope you got some value out of all that rants. If anything, maybe I showed you a really cool podcast for you to go and watch and listen to and learn some economics. And, of course, Klaus's business as usual, just doing what he does best, screwing us all in the public. All right, everybody. Have yourselves a great day. PMA for the win. I will see you all tomorrow, bright and early. Or, if you'd like, come on over to the after party, and we'll do this for another hour or two and pick this market apart in detail. All right. Have yourselves a great day. PMA for the win. All the best. And bye for now.